So we're taking a look at the SPY ES S&P 500 futures, and we have the overnight low here at 1391, which didn't seem like it was going to come into play given the price action that we had earlier on this morning with this nice press, this early press into around 3140. What did we get down to? 3146 off of the open, and then a push into 75 and 80, the levels from above. As you can see, we tried to push up into this area of consolidation right about here from yesterday's price action. That rejected to the downside. I was able to sell my long positions that I started yesterday into that strength. Sat on my hands for the last couple of hours. Not really anticipating that we would test this 3091, but given the strength of the very orderly sell-off, I began looking for paying attention much closer to the price action as we approach this 31, what was that, 3110 level. And given we are now holding thus far this low here at around 3107, that's where I'm leaning long against. We just had a nice little attempt at a bounce. Let's see how that plays out. The reason why I'm going short put spreads and not playing this with calls, obviously, if you've been trading options or you're new to options, you know that the implied volatility on both the SPY and the wider market is sky high because of the elevated level on the VIX. As you can see here, VIX has had a very nice run from all the way down here at around 17 to topping out at around 30 thus far. So because the VIX is very high, implied volatility is very high, and so I don't want to, if I'm trying to play for a bounce in the SPY, I don't want to look to buy calls, because the volatility in the calls will also come out on that upward move. And so what I did instead was get long delta exposure by selling puts, and so I sold a put spread to cap my risk. The 311 4-point wide strike, the 311 307. Keep it simple, smarty. Be safe out there today, guys.